All right. All right. Good morning. Good morning. How's everybody doing? Welcome to another day in the stock market. Today is Wednesday, the 19th, right? So today we're going to go, and the first thing we're going to do is we're going to look at our, well, the first thing we're going to do is we're going to go look at our, we got to go look at our economic calendar and see what's going on. There's been some economics come out. We got to go check out. Second thing we're going to do after we look at the economic calendars, we're going to go look at our dividends and see see what we got paid. So it's payday. So we're going to go add up our dividends and we're going to add those to our portfolio and take a look and see how we're doing on our dividends. See if we can go buy something. That's the reason we do dividends, right? So we can go buy something. So we can go buy something or we can reinvest them, of course, but we want to be wise about our reinvestments. We don't want to just automatically reinvest our dividends back into the same old thing that just gave us the dividends, do we? Right? Don't ever want to do that. Never turn on that little feature in your software that says automatically reinvest my dividends. Okay, never do that. And then the third thing we're going to do is we're going to go through our portfolio. So we get to look at our options portfolio, and I can see right now, just like Romper Room, if I take a look, I can see that we're up $1,591. That's not bad for a beginner. And if I look through my Romper Room thing here, I've got John C. Gazy coming in with the gold today and Bruce coming in with the silver. We got a couple more guys out there watching than what are saying hello. So we'll throw up your marquee and we'll make you famous. All right, let's get on with this Romper Room game. Okay, first thing we want to do is we want to come in here and go to our news. Let's go check out the news, shall we? That's what we have to do first thing. And the news is at economics.com, tradingeconomics.com. That's where I like to go. Tradingeconomics.com/calendar. And it says Wednesday, February 19th. I've got it on Impact 2. And on the countries, I've just got the US down here. And so we're going to come back here. Oh, what did I just do? Screwed it up. Okay. Impact 2. There we go. All right. 5 o'clock this morning, we had 30-year mortgage rates. They went down a little bit. 6.95 was the previous to the 6.93, just a touch. And then we've got building permits came in this morning at 6:30 along with housing starts. So are we getting some building permits? The forecast was 1.47. Consensus was 1.46. The previous was 1.482, and it came in at 1.483. So it barely came in a little bit above the previous, but not to the consensus or the forecast. So that's a little bit disappointing. Oh, wait, no. Forecast was 1.47. It came in at 1.48. So it actually went up. Building permits went up. How about that? This little thing, oh, not by much, though. Not by much. Better than back here in October, September, August, back in here. Nobody's building here. So we got a little bit better going on. All right. What about housing starts? Housing starts come in at 1.4 was the consensus. The forecast is 1.35. Previous was 1.515, and it's coming in at actual at 1.366. So that's down. Housing starts went from a 0.515 to a 0.366. But if you look at that, 2025 so far, December, well, that's interesting. That's interesting. Well, that's not exactly the greatest news in the world either. So we'll have to go see. Let's go look at the market and see how that reacted. Building permits month over month. Down 0.8 was the forecast. Actual is 0.1. That's good news. Housing starts month over month. Down 0.9, down 9.8. Actually down more than they forecast. Previous was 16.1. So looks like they had a kind of a rush and then they got all the rush over and it's kind of down a little bit. All right. FOMC minutes come in at 12 o'clock noon. So 12 o'clock noon, the market's going to rock and roll. Get to find out what those boys are going to do. All right. They're not happy over there at the Fed. Somebody I know has been threatening to go over and look at their books. They don't want that. Not at all. Now, they're bookkeepers. So there really shouldn't be a problem over there, right? Right? I mean, technically speaking, those guys are bookkeepers and they should know right down to the penny what they're doing with their money. And so if they get audited, which they've never been audited, nobody audits the auditor, then who knows what'll happen over there. But it'll be an interesting audit. All right. All right. There's something else I wanted to do today too. Is I wanted to look at the price of gold. You know why, right? Somebody I know, wants to go look at somebody wants to lift up the skirt of the government, take a look at their gold storages, GLD. Oh, look at the price of gold going through the roof. That baby is rocking and rolling. So if we come in here and we do a little trend line work, you can see that we got a nice little break right here on that blue light, and it started to pop. And it broke the previous high right here. And it's still rocking and rolling. Now, where's it going to go? Nobody knows. Where's it going to land? Nobody knows. Where are we at? We're up in the second Darvis box, that's for sure. So if we go back, there's the 3 drive. Oh, that's a 4 drive pattern. Holy smokeroos. Look at that. Drive 1, drive 2, drive 3, drive 4. And then it went sideways for a little while. Now, this was the big rush going into Brexit, right? The Russians were buying up gold as if it was going out of style or going into style. That doesn't make any sense. They'd buy it if it was going out of style. Who came up with that wording? If it was going out of style, people wouldn't buy it. It's going into style. So they were buying it like crazy. And Vladimir Putin actually went out and told his people, buy gold. He said, Russians, buy gold. Because he says, we're going to run the gold market to the moon. And they certainly did. And we had this little drift off in here coming in towards the end of the year, which is a little profit taking. But now it's taken off and going to the moon again. So if you guys own gold, you should be a little bit happy about that. But we're a little bit worried about gold. Wondering if there's anything in that Fort Knox of ours. Is there any gold in there? Who knows? Somebody wants to go take a look, and somebody's not very happy about that. You guys hear that? Not very happy about going to see the gold. I wonder why. Why wouldn't they want them to go look at the gold? And what would happen if the gold wasn't there, or if it wasn't as much as they said, or it wasn't there? What would happen to gold? Would gold go like this? Or would gold go like this? I think gold would go like this. If there wasn't no gold in there, I think gold would go like that. And that may be what you're seeing right here, right now. Let's see what our Fibonacci projection says, all right? We can do Fibonacci projections on gold. Well, let's see. How are we going to really do that? Let's just do it with the dollar calculator. We're just going to say from this low right here to the previous high, or to the previous break, and then the 100% projection would take us up to here. So that's kind of our initial target up in there. This thing hasn't had a pullback at all. Not one little pullback for that entire run. That's really rare. Even over here, you notice we got breaks in the blue light. So we got a break here, we got a break here, we got a break here. And that's your natural trend. That's the normal strong trend line, right? You're going to have breaks in there on the way up. Generally, we get 3 of those. 3 drives like that. This time we got 4 because it was super duper strong. And then that's when we get our little ABCs back in here. And the thing is, this thing came down. It didn't even give us an ABC. It came down to the 50% level right in here. And it bounced it there, bounced it again here. But we wanted to see that one actually come underneath this one. You know, from a technical standpoint, you kind of want to see it go ABC like that and then go. But it just had too much strength. It just took off and went. Go, 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 baby, go. So I don't know. We should get a little bit of our buying opportunities when it breaks those blue lights and starts to come back in here and then goes one more time. And that's kind of what we want to see. We want to kind of see it pull back a little bit, break those blue lights. But man, if somebody walks into that Fort Knox here in the next day or two and says, live streams it on X and says, there ain't nothing here, empty rooms, I think gold is going to go straight up, straight through the roof. It's going to have one big bar that's going to go, wah. I don't think we're going to see a flush at all. All right. So let's come back in here and let's look at our portfolio. So let's come over, and first thing we want to do is pull up this window here. All right, here is our portfolio. Let's move me out of the way so you can see it a little bit better. And we're going to come in and we're going to see how much money we got. So let's see if we got anything paid off. So you can see our first lineup in here is YMAGs. Current share price is $18.12. Dividends, most recent was 0.13. We need to probably update these. And then the dividend yield is 38%. So on a weekly basis, pays on Friday. Start date was 1/1/25. We put $50,000 in there. Payments received so far is $1,751. Remaining seed owed, they owe us $48,000 back before we get onto the gravy train. So far, they paid us 3.5% back. And payback months left, 34. Paybacks years, 2.91. And these are our estimates of how much money they should be paying us, about $1,300 a month. And as we come over here, equity in the business, we got shares holding, cost of what we pay for them on average. And this is how much shares we're holding, 2,630 shares. Current equity, liquidation, I quit, would walk away with that. Difference in the profit and loss, we're down 603 on the NAV on YMAG, but they've paid us 1,751. So you have to actually take that into consideration. Oh, that's what that is. That's 60 after the 1,700. Okay, so that's okay. We're going to come in here and let's see how much they're going to give us today. YMAG. So we're going to put that right down here. So to find out how much we've been paid, we have to go over to a little tool that shows us that, and that's this tool. So let's go over and slide this over here, and we're going to go YMAG, YMAG. And the last time we put YMAG in on our UBI, Universal Basic Income, was 2/6. So when was that? 2/6 right there. So this one, you can see it. I'm not in the way. Oh, this is a reconciliation month. That's not good. We don't like reconciliation months or reconciliation weeks. This is when they do their reconciliation. And so they average out how much they can pay us based on whether the market's rallied or not. And the markets haven't been going up. As you know, markets have not been going up. And YMAG is paying dividends, trading options on the Magnificent Seven, which have all been lackluster to say the least, right? Lackluster. So our reconciliation week, or this may just be all they're going to give us because that's all they made. I think it's a reconciliation week. Oh, we can go look and see. This one here is 18. This one here is 19. This one here is 10. Reconciliation. Yep. See, it's time for a reconciliation. So we got big, nice, not so nice. 0.051. All right. Well, it is what it is. Let's go add our money in there. So it's February 13th. Oh, we're going to have another one here on this Friday. Today's Wednesday. So this one we're lagging back behind a little bit. So February 13th, 0.051. So let's come in here. Oh, we have to do our math on this one. In my real money one, it just gives me the numbers. But in here, we have to mathematically calculate it. That's okay. It's demo. So I have to do a little math here. So if we have how many shares, weekly income. No, that's not shares. How many shares? You got to slide over, Lan. Number of shares. We got 19. Cost of share price 19. So we got 19. Oh, we got 2,000. That's where we at. 2,630. 2,630.19 times 0.0. It was 051, right? 051. 051 equals, they're only going to give us $134.13. Don't forget the 13 cents. So that's our reconciliation. Look, we had another reconciliation right there. So here we go. All right. And the date was February 13th, 0213-2025. And if you want this spreadsheet so you can do this for yourself, all you have to do is subscribe to Pit News Magazine, and it comes with your subscription service. And of course, your subscription service to Pit News Magazine is only $39.95. And I think if you hang around for a little while, I might show you how to get that half off. All right. So it's $39.95 for one full year, 12 issues, Pit News Magazine, and you get this spreadsheet as a bonus. Free. It's all free. Everything's free except for the magazine, and it's $39.95. All right. So it's 134.13. Boom. All right. So that gets added in there. That's our money, $134. So that's fun. Let's come over here and add that one to our February YMAG right here. So right here, we're going to sum. I might have already done it. Did it include it already? 28? Yeah, we already included it. We went from 27 for February to 30. So it's already included. So it got put in there. 623 so far on YMAG this month. You can't poke a stick in your eye for that one. All right, here we go. What's the next one we got? NVIDIA. Oh, we don't have NVIDIA. We have Tesla. Now, Tesla gets paid on the 27th. If we come over to Tesla, we can see TSLY. We ain't got nothing. No money coming. Last time it paid us a 717. 717. This time it's paying. That one was $1.28. This one paid $1.12 plus 9. $1.19, 20, 21, 22, $1.22, close to that. This one paid out only 58, 59 cents. Another reconciliation month, another dollar. That one was 75, 80 cents, 82 cents. This one was 89 cents. That's on Tesla. All right. So that last one's 71 cents. That was pretty good. But that was for, did we even get a payment on Tesla yet? We did. Oh, it was $2,531. That's what we'll probably look towards getting. About probably another $2,000, $2,500 on Tesla. Is that what we got $50,000 in Tesla. So we should get around $2,500, I would suspect. It says it's estimating to be $3,500, but the last couple of times it's been a little bit low because Tesla's been coming straight down. Although, the last week it's been going up a little bit. Let's go look at Tesla proper. TSLA. Yeah, see, it's still not. We need it to move higher. We make more money when it moves higher. Doesn't mean we don't make money when it comes down. We do, because it's an option strategy. They're selling covered calls and selling naked puts and selling puts, covered calls, and long positions. But our long position's not doing so well. Market's coming down. But we're not afraid of that, right? Because we know nice little ABC pattern coming off of that nice rally. We thought it would be a little bit bigger than this. We thought we'd get a third drive out of here. We only got 2 drives, drive 1, drive 2. Unless you wanted to call that little thing right there drive 1, drive 2, drive 3. But no, we're not going to do that. This is drive 1, drive 2, and then it came back and made us a full ABC pattern back down. So that's our drive 1, drive 2, counter trend, drive 3. And we're thinking right here, this is a good place to start buying Tesla TSLA stock. So right here is a good place to load up. So we may go over into our portfolio. And keep that in mind. Now we might want to put on some Tesla stocks to at least sell some puts against it. All right. So let's go do that. But right now we don't have any UBI. No universal basic income coming from Tesla. Not for another couple of days. Today's the 19th and it pays out on the 27th. So I have to wait on that one. MSFO. We do have a little Microsoft. All right. We don't have a lot. We have $500 worth. Very small. We're expecting about $12. So let's go see on if we get, well, maybe, I don't know. Maybe we already counted that one. Let's go see what we got on Microsoft. MSFO. Going to pay us some dividends. MSFO. Holy cow. Look at MSFO. Is Microsoft really doing that badly? MSFT. Microsoft is really not doing well. We need you to go up, Microsoft. It's down. Look how low it is. It's down here at the very bottom of the channel. Now this is a Donchian channel that I've got set to 100. You can do that on yours too. We do that over here in Track and Trade. I got Track and Trade up too. Maybe. Where's my Track and Trade? Oh, there it is. So we can go over to Tesla. No, Microsoft is the one we want to look at right here. MSF. Look at that. Nasty Microsoft. MSFT. What are you doing? What are you doing? Well, look, we got our hedge on. And our hedge is paying us off at 639. I don't think we need our hedge anymore. I don't know. It might drop some more. It's being so ugly, but I think we got the blue light coming in down here, and it's going to intercept that blue light. I think we're down at the bottom. I don't think it, man, that pattern doesn't say we're at the bottom. That pattern says, watch out. It broke a little bit. I don't know. I don't trust it. Let's go look at Microsoft a little bit more. We're up $637 because we've received nothing on our 660. That's not going to pay. Well, we'll get our 660 here pretty soon, but then we're going to get our shares. We're going to have 100 shares in here. This is our hedge I think we put on. Yeah, and our hedge, we received 530. Actually, we've received 403 on that one, and we paid 592. Market value is up 4,000, which is cutting our losses. And we paid 3.6, so we're up 592 on that one. The question is, do we want to take it off while it's profitable? And then this will show that we're losing $350, $360, but we're going to get assigned some shares here in just a couple of days. We're going to have 100 shares of Microsoft at that red line. And that's okay. That's not a bad spot. I mean, we could roll it if we didn't want them. We could roll that if we didn't want them. That blue light's still quite a ways away. You can see its trajectory. Its trajectory is like right down here, right? If it kind of, I don't know, kind of like that. And that's going to intercept somewhere. If it starts to go up, that's where it would intercept, is right out in there. Make your best scientific wild ass guess. Decide whether you, if that thing doesn't fall again, you start to lose your $600. So if it starts to go up, that $600 will go away real fast. And the question is, do we think it's going to go up, or it's got a little shelf happening right there? Like that. And if it breaks that little shelf down, it'll flush again. Nothing says it can't flush again. Certainly can. And Elon Musk came out with his new Grok 3. Did you see it? I don't know if you guys follow that kind of thing. But Elon Musk Grok 3, that new AI system of his. Wow. Wow. For those of you who like wow, let me get me out of the way. Look at this. You can see this a little better. You can see these numbers down here. That Grok 3 is really super smart. The problem is, these guys have these really super smart AI systems. They're already so damn smart. You can't, there's nothing, there's not a person on planet Earth that's smarter than these AI systems. I don't care what they say. Right now they're saying, oh, it's as smart as a high school kid ready to go to college. Are you kidding me? These things are so damn smart. You can ask them anything. There's nothing they don't know. And that's a high school kid? I said, well, we're ready to go to take this one to college. All right. How much smarter are they going to get? Because they know everything already. They got the entire world's knowledge built into them. That's really all they are, is a search engine. They're just a fancy search engine. Everybody's afraid of them. It's just a fancy search engine. But they can do things, right? I mean, they're supposed to be able to do things. The thing is, it's the user interface that is, in my opinion, and what do I know? Just some guy on YouTube. But in my opinion, it's the user interface that is lacking for these things. Because if you go and see, well, let's go show you. You guys are probably familiar with it, but let's go play with it. I'll show you. If you go look at the user interface for some of these, here's Chat GPT. We'll just come in here. So this is Chat GPT. I help it come up with words for my YouTube channel. So that's one thing I do. But you can come in here and you can see that this is all it is. It's just a chat window. It's a search window. That's all it is. So if you want to know something, you just like Google, you just come in here and ask it, what is this? And it searches the whole world's knowledge and it just pops it out for you and says, there it is. What else is it supposed to do besides, be a fancy search engine? It's got lots of capabilities. It's really smart. It's a good, smart thing. But this little user interface, in my opinion, is its downfall. They've got to come up with a smarter way of having AI do things for you other than just talk to it like it's Google. Google we've had nobody's invented anything better than Google for, ever in this industry. Ever is as long as Google is alive. And they come out with this new chatbot and give it the same user interface as Google. It's just a search engine. That's all it becomes. Just a fast search engine. I mean, smart search engine. It's a better search engine. That's all they've done is recreated Google and made it smarter. That's all it is. So everybody's scared of it. Oh, it's going to take your jobs. Well, you know what? It might, but not until they fix the user interface and make it something fancier than come in here and ask it questions like you're on Google search, because that's all it's doing. It's just a search engine. It's just a fast search engine, but it's a good one because it's better than Google. You don't have to go and sift through all the websites to find the answer. It goes out, searches through Google for you, and then grabs all the information from the websites and sticks it into a document. Says, here's the answer to the things that you wanted to know. So you don't have to. It's a better search engine. It's a better Google. That's all it is. Everybody's scared of it. It's just a better Google. And it can talk to you. That's cool. I mean, they put a voice to it so you can talk to it now. But it's the user interface that really, in my opinion, needs to be updated to something better than just a search engine. And when that happens, you'll start seeing it able to do things other than just, search the web for you. All right. So what are we looking at here? This is Microsoft, and we're just trying to decide whether we're going to hang on to these right now. I'm going to hang on to them one more day. We got a couple of days here until we get assigned our shares. We'll wait and see what happens on that day. All right. We got a little bit to go here, but on Microsoft, I think we've got some dividends. So we got to go look over here, and we're going to go back over to here, and we're going to go into MSFO. It's not going to be a lot of dividends because we only have $500 in here. Oh, let's see. Maybe not. It's February 6th. Maybe we already entered that one, did we? MSFO, February 6th. Oh, $10. We already entered that one. So we don't get any more money on that one either. Well, that's disappointing. Let's find something we can get some money on. MSFO. How about Misty? Oh, maybe Misty. Misty's giving us some money on May 19th. And it's the 19th. Well, let's go see if Misty gave us our money. We got a dividend yield on Misty of 146%. We got $56,000 in there. Okay, MST. Why? Yes. And did they pay us? They did, right there. On February 13th, $2.22. Okay, do some math. How many shares do we have of Misty? We have to come over here and look at the number of shares we have. I'm going to slide over. Screen's too small. So how many shares we have? We have 1,936 shares. So that means we're going to do some math. Clear, clear, clear. So 1,000, covered it up still. 1,936 right there, that number. 1,936.53. I know it's really fun to come to YouTube channel and watch somebody do math. Sorry, that's why we're here. Doing math is fun because that's how you count your money. And counting your money's fun, right? Okay, so 1936.53 times 2.022. Did I do that right? Looks right to me. Equals $3,915. Boom. All right. What did we estimate? $5,900. Well, we got to update our dividends then, because that's estimator. Our estimator estimated way high. That's because Misty's been going down too. I mean, it would, if Misty was going up, we'd make a lot more money, but it's going down, down, down. So, all right, not as much money. Okay, so what's the date that they paid us that? February 13th, 2022. So we're going to come in here to Misty. 01/13/2025. How much? $3,915.66. Wasn't nearly as much as we wanted. Yeah, but it's about exactly the same. Look, within $2 of what we got last month. So I guess we can't complain too much. I guess we need to update how much they pay us. All right, so we come down here, Tesla, Microsoft, Misty down here. February. Hey, wait a second. Oh, it already added it in. I already had that number sitting there waiting. So far this month, we've made $4,539 in UBI in our universal basic income. How much did you put into Social Security? Do you think you're going to get this kind of money coming out of Social Security? Have you put more than $156,000 into Social Security in your lifetime? I doubt it. Nobody's ever put that much money into Social Security. And it paid us how much this month? Well, paid so far $4,500, but we still have Tesla and Microsoft to pay off. Not that Microsoft's going to be a lot, but we still have Tesla to pay off, and that's been last month was $2,500. So last month we got $7,722. $7,722 is what we got last month on our investment of about $150,000. Do you get $7,700 from Social Security? And did you put in more than $156,000? That's why I don't have a lot of faith in, well, of course, Mr. Elon, he's been out there showing that we've been paying people who are 150 years old Social Security. Millions of people who are 150 years old, 140 years old, 130, millions and millions of people getting paid Social Security who are 150 years old. How does that happen? Well, we know how it happens. We know how it happens. The question is it going to continue to happen? That's the question. I mean, it's one thing to point it out and say, look, the emperor has no clothes. It's another thing for the emperor to say, damn, I better put some clothes on. That's a whole nother story. All right, so we're in here at 4,500. 7,700 is what we got last month. Let's see, on our 1,056 investment. So that means that they have paid us so far $12,000 towards our seed money. We got 144,000 to go before we're on the gravy train and have a break even. Paid back so far, they've given us 7.8% paid back so far. They're going to give us our entire $156,000 back in 1.1 years or 13 months. We will have received our entire seed money investment back. That's pretty good. I don't know who would complain about that. So then we'd be on the gravy train. Let's get on the gravy train. That day will never come. You bet it will. Probably never come because you'll keep putting money back in there. And if it does, it keeps extending the payback years left, but you get more and more money, but you keep extending. And so you'll never be on the gravy train. That could happen. Nothing wrong with that. I mean, you can still spend this. You don't have to wait until you're on the gravy train to start spending your money, right? Of course not. Of course not. How much cash do we have? Well, since we haven't spent any of it yet, we still got $4,539 in cash. I'm just going to put that right over here. 4,000. Well, now I forgot the number. 4,539. 4,539 sitting in cash. So we got that cash sitting there. We can do something with it. We could put it back in. And you know what I like to do? Tesla hasn't paid us yet. And its ex-dividend date isn't until, let's find out. When is Tesla's ex-dividend date? That's the date we have to have our money in there to get paid back. And how much would we get paid back? If we had Tesla's paying out current share value yield, they're currently paying out how much per share? Should we do a little math? If we come in here, cost per share, well, what's it trading at today? We could figure out, well, it's just roughly, let's see. Tesla's paying at roughly 98%. So if we put $4,500 in there, let's just do that. 4,000. We'll just do a wild ass guess, all right? $4,500. 4,500 times 0.98. That would be 4,000 divided by 12. It'd be an additional $367 that we would get if we put that $4,000 into Tesla right here. We would get an additional $367 on day 27. That'd be cool, right? Or you can take the $4,000 and go spend it. Which would you prefer? Or we could put it into Misty. The problem with Misty is Misty paid out already on the 19th, right? So we would have to wait an entire month to get our Misty. So if you put it in Misty, you have to wait a whole month to get it back, but to get a payout on it. But if we put it on one that's coming up a little closer, like Tesla, we can get it sooner. And the sooner you get your money, the sooner you can spend it. Or put it back into Misty, and then Misty would come around a lot sooner than Tesla, and you do that little rotation thing, right? Where you take your you double up your. There's a really good article in Pit News Magazine about doing that rotation of dividends. It's a really cool article. And I know there's people in here who have never heard of Pit News Magazine. So for those of you who have, go get yourself a cup of tea while I introduce Pit News Magazine to those of you who have never seen Pit News Magazine, because you need it. And here it is.
Hey everyone, it's Claire here. Are you ready to take your trading knowledge to the next level? Welcome to Pit News Magazine, your trusted source for trading intelligence. Whether you're a seasoned trader or just starting out, this magazine delivers the insights you need to stay ahead of the market. Featuring articles from experts like Dr. Scott Brown, Aidan Gray, myself, and of course Mr. Land Turner. Pit News brings you exclusive strategies, deep dives into market psychology, and powerful trading techniques. Find out about the exponential power of growth, seasonal trading secrets, and even Land's latest wild eye, crazy eye iron butterfly strategy. Each issue is packed with expert trading strategies, top stock picks, key seasonal trading insights, and comprehensive analysis of commodity futures and ETFs. You'll also find tips on technical analysis, option strategies, and much more. No matter your trading interests, we've got you covered. And the best part? You can learn your way. Listen to each recorded article, read the full in-depth lessons, or watch our video breakdowns. It's trading education on your terms. Right now, we're offering a special deal. Get your first full year of Pit News for only $19.97. That's 50% off the regular price. 12 issues of powerful trading insights, backed by our 100% satisfaction guarantee. So, don't miss out on this limited time offer. Head to pitnews.com and subscribe today. Empower yourself, enrich your trading strategies, and stay informed with Pit News Magazine. Trading intelligence right at your fingertips. Okay, let's get back to Mr. Turner. Thanks for sticking with me.
All right. Thanks, Claire. That was a good little ad for Pit News Magazine. For those of you who are not aware, you can get Pit News Magazine and you can get all these spreadsheets that we've got in here. This one, this spreadsheet, 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 and this spreadsheet, and this spreadsheet, and this one, and this one, and this one. You can get all these spreadsheets with your subscription to Pit News Magazine. All right. And the one we're using right now is the one that's the cash cow portfolio, because we want to build ourselves a cash cow portfolio. All right. So where did we get to? We got over to trying to decide what to do with our $4,000 in cash. I think for right now, we're just going to hang on to it. I could put it into Tesla and keep building that up. How would you do it if you wanted to do that, Land? Well, Tesla's our next payout. So we would get that extra $350 if we would just put that in there. And that would pay out in day 27, which is 19. And oh, we were going to go look at the ex-dividend date. You know how we can find out the ex-dividend date? I got a good idea. Let's go ask the AI system. Ask me anything. When is the next ex-dividend date for TSLY? And that's the day you have to have your money in the market before they pay you out. And then, of course, there's the dividend date, which is the day they actually pay you out. So the next ex-dividend date for Tesla, Yield Max Tesla Options Income Strategy ETF, is expected to be March 6th. What? This date is forecasted based on ETF's monthly dividend payout schedule. The previous ex-dividend date was January 23rd. 2025, and given the typical monthly frequency, the next one anticipated to fall on the first Thursday of March 2025. Well, we haven't had one for February yet. Dividend frequent monthly. Last ex-dividend date was January. Last dividend, why are we not getting one on February? Ex-dividend date for TSLY. Come on, tell us the ex-dividend date is still available. The February ex-dividend date for Tesla Options Income is February 20th. This ex-dividend date is tomorrow. Given the current date of February 19th, the corresponding payment date of dividend is February 21st. Well, there you have it right there. Dividend amount of 72 cents per share. Additional dividend information. Payment February 2021, dividend February 21, dividend yield approximately 71% return on your money. Go get that down at Cash Valley Bank. Say, I would like to deposit today how much do we have? $4,500 into your bank, and I would like to collect my dividends tomorrow at a rate of 71.82%. Would you please do that for me, Cash Valley Bank? What do you think they're going to tell you? Go pound red sand. Why red sand? For those of you who don't know, why do I always say go pound sand? Go pound red sand. Because we're in southern Utah where all the sand is red. Come down and see the red rocks of Zion Park. That's what we're talking about. They'd tell you to go pound red sand. They ain't going to give you 71% return on your $4,539 on the 21st. But we will. Let's come in and do it. All right, we're going to do it. Let's take our Tesla in here, and we're going to go down to seed money, which is down here. And we're going to say today is 2/02/19/2025. And we're going to put in amount $4,539. Now, we got to remember we did that. And I'm not sure how to remember we did that, because sometimes we got our money. It's It's a spreadsheet, and you got to remember that you took that money out of here, 4,539. We just make a note of it. We'll just put a little note in here that says we took 4,539 on, what's today? February 19th, and added it to TSLY. So that's just a note for us to remind ourselves that we did that, all right? So that we don't double up and spend that money twice. So cash, we have no cash. Boom, zero cash because we just spent it. Oh, we should make a loan payment. Oh well, too bad, Grandma. Let us make some more money first, Grandma, and then we'll pay you a loan. That was a loan from Grandma. Let's come in here in dollar. Let's make that $1. So we put in 15. Now we just put in another 4,500, which will reflect up here into Tesla, which is why it's now 54,000, which comes from this number right here, 54,000 total seed number. Put it in here. Now, of course, if you do that, it's going to extend your payback years back and your payback months. So now it's not going to pay us back nearly as soon, but it's going to pay us more money along the way. I hope that's okay with you guys. A little bit more money, but it might take us longer to get our cash cow. All right, so we've got $161,000 invested now. And what would be a nice thing for us to do is come in here and spend some time updating these dividends to make sure that we got all the latest dividend information in here. Because these, unfortunately, thanks to Microsoft and their lousy capabilities, see this? They don't put dividends in this list. Where's the dividends, you ding-dongs? They don't give us the dividends, so we can't have that done. So we have to update it manually. So all these numbers have to be updated manually. And the way I do it is I come in here and I stack them in there like that, and then I divide them by the number to get an average. And I haven't done that for a couple of terms. So I have to go in there and spend the time to update all those dividends so we can get an average of what the dividends are, which is what gives us our yield. So there is that little bit of spreadsheet work I got to do behind the scenes. Behind the scenes. All right, I guess that's it. I don't have it. You guys have any questions about the spreadsheet? Any questions about the spreadsheet? So payments received so far since January 1st on our $161,000 investment is $12,261, which is a 7.6% return. That's not bad for 1 month. Go down to Cash Valley Bank and say, I would like to have, well, I guess it's 2 months, not quite 2 months, month and a half. And say, I would like to have 7.6% return every month and a half. What did I tell you about red sand? All right. I guess that's it. Let's go over and look at our software and see what we got going now. We got to make money. How do you get money in there, Lan? Well, there's a number of ways you can get money into your spreadsheet. Right here. This is where you're going to put your money in your seed money. Right here. You add it in here. Well, where am I going to get seed money, Lan? Well, there's a number of ways you can get seed money so that the seed money will show up in your investment money so that you can get your payments received money. You can go work at Walmart as a greeter. That's one way you can get some seed money. You can go drill teeth if you're a dentist. It's another way you can put money over here. All right. I knocked my tooth out this last weekend. I got to go. And they told me it's going to be $1,500 to fix my tooth. Are you kidding me? $1,500 to put a little cap on there. But that's, he's going to take that money and put it in here, seed money, and he'll have $1,500 and he'll be able to increase his payments received. Do you think he'll do that? Probably not. He'll probably go pay all of his employees, pay some rent. By the time he's all done with all that, maybe he'll buy some dinner. He might not have anything left to come down here. But at that point, he should go put somebody else's tooth on cap and make 2 caps. And then maybe you'd have some money. That's business. That's how it works. All right. So here we go. We're going to come in here, and the way we're going to get our seed money is we're going to go to work for it. We have to work for our seed money too. Although I'm not going to go to Walmart or Walgreens or Walmart and be a greeter. I'd probably go to a gas station and pump gas because that's my skill level. So here we go. let's come over here and do this. This is also another skill I have. I can trade the stock market and make money. And then I can take my profits from here and put it over into my spreadsheet in here where I get my dividends. So that's why I want to make money over here. So let's come and look at Tesla. We already looked at this one. Oh, we're making $3,146 on Tesla right now. Let's see what we got going. Probably not that much. Well, we do. Let's go see. Just chart on Tesla. We have a call and a put. This is our, that's why we're up $2,900 on our long position. This is a, let's talk about this one for a second. I bought a call option on Tesla. Okay, this is exactly what YieldMax is doing to make money. Okay, this is the exact strategy YieldMax uses to make money. I do love the gas station. My dad had gas stations for my whole life growing up as a kid. I worked in a whole bunch of gas stations. I like gas stations. I'm a gas station aficionado. We had Conoco gas stations. We had Sinclair gas stations. I guess that was the only two, Conoco and Sinclair. And I worked at the gas station, spent many hours as a youth in the gas station. That's why I keep saying Frosty, Mr. Michael, that you can go work in a gas station because that's my skill. I have that skill. I know how to pump gas and sell Twinkies. Okay, so I also know how to buy and sell options. So if you guys want to learn how to buy and sell options, come and hang out with me. I'll show you. Because I'd rather do this than go sell Twinkies and pump gas. That's all I'm trying to say there. Okay. So let's talk about what this is. This strategy is a strategy that is used by YieldMax when they take your money. Now remember, when you give YieldMax money and you invest it into their fund, so let's say, for example, their YieldMax fund is TSLY. That's the YieldMax fund for Tesla, right? Now, if you put your money in there, they're going to use that money to buy options in Tesla. That's what that means. Now, they're not going to take your money that you put into TSLY and go buy options on Microsoft. They're not going to do that. Why? Because you told them that you wanted to only put your money into the options that they're going to trade on Tesla. That's why you put it into TSLY. So you give them your money, they put it into TSLY, they use it to buy options. Now, remember, when you buy options, you don't actually invest the money into the stock itself. So that money that you put into TSLY is not actually invested in TSLA. It's used to back the options, right? Because when you buy an option, you have the right but not the obligation. The only thing you have to do is put up a performance bond to buy that option, which is the right but not the obligation to buy the underlying stock. But you didn't actually have to put up, you didn't have to actually give them the money, right? It's just a performance bond. And it's about 10% of the cost to buy the actual shares. And so they're not going to, that's where you get your leverage with options. You get a tremendous amount of leverage, which is why when we're coming over here to our little spreadsheet and we're saying, hey, we're going to go down to, Cash Valley Bank and we're going to tell them we want on our money, because we're in Tesla, we want 98% annualized return. And they're going to tell you what? A 98% annualized return is unheard of. There's no way here at Cash Valley Bank we could ever provide you with a 98% annualized return. That would be unbelievable. And so that's what we're getting over here. But how are we getting it? Well, we're getting a 98% annualized return, which is tremendously more than what you can get on most stocks. Now, some stocks will go 300% return, some will have 80% return, and some will have, big returns because they shoot through the moon, shoot to the sun, shoot to the, out of the galaxy this year, and they make big returns. But the way we get big returns is through the buying and selling of options, which is where you get that because of leverage. All right. It's not because the stock went to the moon. It's because we traded it and we used leverage in our favor to get those types of returns. Now, some options are very volatile, like Tesla, very volatile market. This market goes up and down. It's all over the place. So if you come over here and look, your dividend yield is 98%. But if you go to Apple, you can see that Apple's dividend yield is only 27%. Well, what's the difference? How come Apple's trading options on Apple versus options on Tesla? Tesla gives us 98% and Apple only gives us 27%. Well, because Apple is not wild and crazy and all over the place like Tesla. Tesla has high volatility, which causes us to be able to sell and buy our options at a much higher implied volatility. All right. Apple's options have a very low implied volatility. They're much safer to trade. All right. They don't whipsaw all over the place like the Tesla ones do. So same with Microsoft, much safer. In fact, not as safe as Apple, but much safer than Tesla. Tesla has really volatile options. But look at this one down here, Misty, 146%. Holy macaroni. That is some very volatile options. Those options are crazy. Why? Because Misty is tied to Bitcoin, and Bitcoin being a currency, and a crazy currency at that, right? Bitcoin is very volatile. So that means that their options are very volatile, which means that they sell for a much higher premium because of implied volatility. That's why you get such high returns. So that's how you can gauge and see what's going on here and see the volatility of the market is what gives you the high return. So if you come into Yield Max or YMAG, now remember YMAG is trading the Magnificent Seven. All right. So it's trading options on the Magnificent Seven or Apple, Amazon, Netflix, Google, Facebook, Tesla, and Nvidia, right? So that's your Magnificent Seven. And when you add those all up together, divided by 7, the average comes out to be 38% yield, which is still pretty damn good. Let's say you take your money down to Cash Valley Bank. Let's not go to Cash Valley Bank. Let's go down to Chase Bank. All right. We're going to go down to Chase Bank and say, I'd like to put this into a CD. What is my rate of return on the CD? And they're going to say, well, if you leave it in there for 2.5 years or 5 years, we can give you 3.5% annualized return. And you're going to say, wait a second, that's not very good. That makes 38% look really good. And you're saying 38% is not good because I can get 99% with Tesla. I can get 146% with Misty. So why am I putting it in 38%? Well, if you went down to Cash Valley Bank and got a CD for 5% annualized return, suddenly that makes 38% sound really good, right? Okay, that's what we're talking about here. So how is this done? Well, it's done by coming over here and you put your money into TSLY. And TSLY is not investing dollars into TSLA. They're not putting money over here. If they did, you might as well just buy TSLA. What's the point? What's the point? If they're just buying shares, buying shares of TSLA, there would be no point. You just well buy TSLA. So they don't actually take your money and invest it in TSLA. What they do is you put your money into TSLY and they use it like their cash bucket. Okay. So when you trade, you have a cash account. Up here in our cash account, we have $127,000. That's our cash account. And when we buy and sell options, we don't actually take that $127,000 and put it into a stock, right? Because we're buying options. And when we have options, and especially when you like sell a naked put, it just kind of locks it in margin right over there in the account. It's still sitting there and it can go up and down in value, but it's still sitting there. And we're using all that leverage from our bucket of money that's our cash account to go and trade with. Well, they're doing the same thing. They're using TSLY, which is their bucket of money, which we gave them to trade with. And they're using that bucket of money to back their trades in Tesla, which is done with options. Therefore, they don't need to actually put the money into TSLA. They're not buying shares, they're buying options and they're selling options. And when they sell an option, the premium goes into TSLY and it'll make the TSLY rise in price. If they lose money, right, then TSLY, well, they have to take money out of it and give it to the people who were on the other side of their options trade. So they lose money. So they take money in and out of TSLY as needed. And then when every month comes along, we hold out our big grubby hand and say, where's my share? And so they say, oh, okay, you want some of our cash. All right. So then they take some money out of TSLY and give it to you. That makes TSLY go down in value because they gave it to you. What else makes TSLY go up in value? Well, we just turned right around and gave them our money back, right? We've just put some money back into TSLY, so that'll make TSLY go up in value. So TSLY is not the value of Tesla. It's the value of the cash account that they're using to trade Tesla. The more people who put money into it, the up it'll go. The more people who take money out of it as a distribution, the down it will go. And the more options that they sell and collect premium on when they expire, I have to wait for them to expire, and then they throw that money into the bucket, which is TSLY, and that makes the bucket go up and down. And that's why Tesla goes up and down, not because Tesla's going up and down, but it's going to go up and down kind of similarly to Tesla, because that's the only market they're trading against it, right? They're not going to use your TSLY money to go and trade Apple. They're only trading a single stock against that single stock ETF, which is really unique and very strange. In fact, I don't know anybody else in the entire New York Stock Exchange that does that. In fact, when it was proposed, they're like, you're a fool. Why in the hell would you have a ETF, which is an exchange traded fund, meaning more than one, and then say, I'm only going to trade with it one stock? Why don't you just buy this stock, you idiots? And they said, I'm smarter than the average bear because I'm going to use that ETF, exchange traded fund, as a bucket to hold my money so I can trade options against it on Tesla. There you go. That's the magic of the yield max funds. And that's why I'm so enamored with them. I just love them. I just love them. I love them. I love them because it's what I do. I like to trade options in a very similar manner to the way Yield Max does it. And in fact, as I mentioned before, I read his book. The guy that owns Yield Max, I read his book. That's his book right there. If you want to read his book, you can read his book too. Okay. So his name is Jay Petrocelli and Wayne Ferbert. And the name of the book is Buy, Hold, Hedge. And he teaches you the strategies in this book that he trades with. And I trade kind of the same way he does, but yet even after 20 years of me trading options and doing all this stuff and being taught at the Board of Trade and all that stuff, I still learned stuff in this book that I didn't know. That's how smart this guy is. He's smarter than me. Believe that or not. He's smarter than me. So I learned stuff in there that I could do that's really cool with my option strategies. And so I trade options like that to make money so I can put it into his funds and then he can trade my money on his funds. But we got to have money to make money. So Tesla. So what we've done here, this is what he does, and this is what we've got going here. So he buys a long-term call option, kind of like a poor man's covered call, right? It's an option that has 331 days to go. And then we sell premium, sell put options, short-term put options. I got one in there I sold at 331 days. I shouldn't probably have done that. He doesn't generally do that. He does 30, 60, 90 days against a 300-day option. And I put one in there at that long. I'm going to probably, well, it's up $850. That's pretty cool. I could probably sell that. I could liquidate that one, get rid of it, but it's making money. So I don't want to get rid of it if it's making money. I can take my money. I can take my profit at any time. But see, I sell that premium, and then that helps me pay for the cost of these options. And so I'm selling naked puts, which is something we do all the time, right? We sell puts, but they're not really naked because we have them covered with a covered call underneath, a long-term, poor man's covered call. So that's really what we're kind of doing. And then we sell call options against it up here. So we collect premium on the call option. So in this case, we're going to collect $550. We collected $9,000 on this one, which I should really probably break up over a 90-day period instead of 331. That's in the book. And then if we go in and we receive $655 on this one, which is a shorter term, that's only 30 days. So I could do 30, 60, 90 days, get a little bit of premium going in there. And then that's going to help me pay for the cost of the $25,000 option that is here. I bought 2 calls deep in the money, call options, and we're up $2,000 on that one. So that's how you make money in the Yield Max funds, is by selling premium against the long call, whether it's a call option or a put option. So you're selling premium, you're collecting the premium, and then that money goes into the bucket. They put it into TSLY. Now, if we make money over here, we're going to do the same thing. We're going to take it out and we're going to put it into TSLY too. Let him trade it. You know, just let him do it. But we got to have enough money in the first place to let him trade it so that we can make enough money that we don't have to work anymore. UBI, universal basic income, so that we can have, so we can be independently wealthy. What does independently wealthy mean to you? Well, hopefully it just means that you're making enough money that you don't have to go trade your time for money. And then you can be independently wealthy too. If you have expenses of $1,500 a month and that's all your expenses are, well, all you have to do is make $1,500 a month in a consistent manner coming into you consistently, and you're independently wealthy. If you have $2,000 a month that you need, well, all you need to do is make $2,000 a month and you're independently wealthy. You don't have to go trade your time working at the gas station. Okay. That's the whole idea. That's the idea. Of course, it's a good idea. All right. So we're making money on Tesla. We're up $3,100. We need Tesla to rally. If it does, we'll make more. And that's what we like. We like to make more. Now, if the market goes down, if Tesla goes down, we'll still make money. We just won't make as much. Okay. So that's the idea. Same thing with the TSLY. If Tesla goes down, well, Tesla still makes money because they're selling options and they're collecting the premium, but they're losing the money on the long call. But it doesn't matter because the long call doesn't come to fruition for 331 days in my case, right? See how that works? So we're making money. Let's just hang on to it. Nothing to do. And that's another great thing about trading like this is, doesn't have to be, doesn't have to be active. We like, we oftentimes play it like it's a video game and we want to be active. I want to come in. Oh, I want to go trade. I want to go do something, right? I had a student tell me that the other day. He's like, I want to trade. I want to be active. I want to do it. I was like, well, you don't need to when you're doing it this way. You just kind of sit and watch. You set it up and you sit and watch and you just collect your premium. That's all you do. Whether the market goes up or down, doesn't matter. You're just going to collect your premium. But I want to do something. Okay. I said, do it in the demo account. Just do it like this. So you don't have to be active, and then go play in the demo account and be active. Don't lose your money. All right. So that one, Tesla's making money for us. Let's go look at MSTR. This is the nasty one. Remember, now MSTR is MicroStrategy, software company that has a lot of Bitcoin on their balance sheet. Now, Bitcoin's just been going sideways. It's been absolutely dead, which is fine for us if we got a bunch of money into MSTY, right? Misty, which is the dividend version of MSTR. Well, that's fine with us because all that does is then all of our options expire worthless, which means we get to keep all the premium and we get nice big juicy dividends. And that's good. We're happy with that. We like that idea. Now, would we like it better if MicroStrategies rallied and went up? Bitcoin went up? Yeah, of course, we'd make more money, but we're happy with just dividends expiring, and that's pretty cool too. Options expiring right now, we're at 694 down, but we don't have, we got 121. We bought our options right here. We're putting a call. We did it right at the money, 121 days. So we do need that market to go up. We got to put here, it's going to pay off $270. Market value 17. Paid, wait a second. Oh, that's insurance to the downside. Oh, that's why we're down a little bit right here. This is insurance. We were worried about the market flushing out the bottom, remember? That's our hedge. So we paid $270 of our $360 as a hedge because we were scared the market was going to flush out. And it didn't. So our insurance policy, we didn't have to collect on our insurance policy. I can't feel too bad about that. Market didn't go up either, so it didn't help us pay for it. That's going to expire in 2 days. Oh, well, no biggie. That was an insurance policy that we put on. And just in case that market flushed out, that was our hedge. Okay, see that on the book? Buy and hold? No, buy and hedge. Hedge. So that was our hedge. So we had a hedge on there. It's like buying insurance for your pickup truck. You don't cry and bawl because you didn't have to use it. All right. All right. Next one is Microsoft. Now, this one, we did have to use our hedge. We put a hedge on this thing, and that's why we're up $652. We already talked about that one, so we don't have to talk about it anymore. All right, let's go look at YouTube class portfolio. All right, so this one, if we come over here and look at all, Control A, open all. Let's make sure we got all these charts open. There we go. Whew, look at all those trades we made. Okay, we're up. Says we're up. Oh, we were up more than that earlier. This market's been going against our position. Look, we're long 100 shares right here on Google. What happened? How come we? Oh, our closed. I'm sure we had a hedge on this, and it must have come off. So I don't know how much it was. Well, that's a rude awakening. Hmm. Well, now we're right here where we want to buy more. Let's come in and put another option in here. We're going to come in here. We'll go 30 days. We'll sell a put right here. 300. We do it right there. That's $500. Let's go in there and we'll buy that one. Put $500 on the table right there. Nicely done, Lan. Google, we could put a synthetic on this thing too. Do you think Microsoft's or Google's going to bounce back up off of this red line here? That's the delta Kona probability. Remember our delta Kona probability? That's a Fibonacci ruler all the way from here to here. So this is the delta. This is the Fibonacci sweet spot right there. We got a shorter delta cone right here. And that is right dead center of that. Look at that. Holy cow, from that run to this top, that's sitting right at the 50% level. Problem is it hasn't given us the ABC, and we like to see ABCs. So ABCs would be like this, right? A, B, come up here, give us a little rally in there. Who knows how long, somewhere in here, and then turn and flush out again and come all the way back down into this region here. Maybe to 100% down in here, which maybe would be 78.6 on this if we go Fibonacci line 78 right down to there. See 100% right where I put it. So that could be a possibility right there. But it would have to rally a little bit and then flush out again. That would be a nasty thing. That would be a nasty thing. Where would we want to put our deep in the money call? Well, if we think that there's the possibility that this thing could just turn and start to go up like this and be on its way up, then it's whether you believe in Google or not. Do you think Google's going to be doing well? We could put in, let's price it out. Let's just price it out. Should we just price it out? We don't have any money. We got to go clean some things up. We're all out of money. We only have 17,000. Well, that might be enough to buy if we did 100 and let's do well, we don't want to do that long. Let's do 121 day. We'll buy a call, deep in the money call right here. Oh, well, that's only $1,800. Let's go deeper in the money, 2,500. Go deeper in the money, deep in the money. We could do a couple of those. Ooh, that's sweet. Let's go see how much 121 days out, volume and open interest on these babies. Where is everybody hiding? That's a good one right there. We bought that one. Where's that? Oh, yeah. Look at that. There's some people putting them on right there. That's where they like it. Let's go to calls only. So the theoretical value is $2,400. The premium is $2,200. So we're getting it for a bargain price. We could go down further, though. We don't have to go down. Look, we could save $10 by going down to there. To pay more, but you save $10 on the spread. The spread is $10 less. If we go, oh, look at the spread way down here. That would be a sweet baby right there. We got to look at the delta, though. The delta on this thing is a delta 90, and we really kind of want between delta 80 and delta 90. Delta 90 would be nice. We got $17,000. We could put that baby on right there. That thing's going to move the same, basically, well, 90 cents for every dollar that the underlying stock moves. So if the market starts to rally, we're going to make 90 cents for every dollar that the underlying stock moves. That's our leverage. And if we were to put in, that's $5,000. But if we were to buy 100 shares at 185, that would be $18,000. So we only have to put up $5,000 to make the same amount of money as if we had $18,000 in the market. That's the power of options. And that's why YieldMax makes money without actually buying shares, and why their return is so high, because they're doing it with options, not with shares. Every other company out there, if they do what YieldMax is doing, they do it in a similar, well, nobody's doing what they're doing. Nobody's doing single stock ETFs and then buying shares. That would be stupid. Wow, that would be fun. We could do that one. It's just whether we think Google, that's a good place to be buying Google. We could do a second one if it keeps coming down. If it does a little ABC and comes down to that 100%, 78.6, we'll just put on a second one. Costs us more, but that's okay. By then, we'll probably have more profits. This would be in anticipation that the market's going to continue to turn at this point, catch, hold, and run, start to go back up. All right? So we're getting long alphabet. Okay, there we go. We took it. We got it, baby. We got it. Now what we can do is we can come in here and we can sell some premium against it. So we can come down here and we can go 30 days out and we can sell a put. We sell a put. And now that put's only $100, $182. Sell another one, that's $320. It can help us pay for it. See? See? And in 30 days, we'll get that money. We'll get that $535. No matter what, we're going to get that $535. And it's covered with this long call. It's like magic. That's where you get your 7% return in 30 days, which is what we're getting at YieldMax, right? Boom, boom, boom. One's naked, one's not. So there we go. We just put in $500, $600, $700, $800. And we just bought $2,620 in long calls. All right. And we only got $3,965 left. That used all our money. Let's go see where else we got. So that's Google. ABBV. What is this one? Buy a call. We bought 10 calls and we sold 10 calls. And we're up $1,700. $100 market value, $370. That's just a bull call spread. Do we think that market's going to pop one more time tomorrow? If it does, we make more money. If not, we could just take our $1,000, $1,100 off right now and be happy. Liquidate the multi-leg. Did it let us out? Nope. Probably not going to let us out. Okay, let's try again. Liquidate the multi-leg. So we have to go to, ooh, the spread's $100 on that thing. All the way down to 36. This is not good. They're going to take $200 of our $1,000 to close that thing out. That's a dirty trick. How much should we close out? Made $1,100. Okay. All right. So that brought us back up a little bit. Plus our profit, plus it put that money that we had set aside back into our bank account. So we're back up to 8,600. So that was just a nice little bull call spread on ABBV. Caterpillar. Well, this thing just keeps tanking down, doesn't it? We sold a put. We're going to get assigned some shares in here. That's okay. We get some shares. We'll sell some calls against it. We could sell another one, buy some more shares. That'd be $34,000, $35,000 though. When does that expire? No, not for 30 days. We could roll that down. Roll down to 345. 340? Let's roll it to 330. 350, 350, 340. That's a little far. Oh, that's the only thing we got. It's the only choice we got. Let's roll that one. We're going to market that one through. We'll just roll that down. Is he going to let us roll it down? Nope. Come in here and roll. Let's see. Let's delete this and roll again. Let's try again. Roll down to 350. Roll down to 350. I don't know if I can roll 3. Receive 500. Receive 870. That's a roll. How much? How come they're not letting me roll that? 40. All the way down to 510. No wonders they're gonna making me do that. Might not be any volume. 510. We're trying to roll this thing down to 350. They're not letting me do it. There's 67 volume, 329 on the open interest. That's why. Caterpillar, nobody's trading in 30 days. Come on, Caterpillar. Give me that. I want to roll. Not going to let me roll. It's pending. It's not going to let me roll. Let's see if we can do it manually. Let's come in here and we're going to sell a put right here. See if we can just get that to go. Could not. Caterpillar put order. You do not have enough buying power. Oh. I have to liquidate that one first, but I don't want to liquidate that one if this one won't place. Let's come back to this one. It's being nasty. Chevron. Chevron's making us money. So what do we want to do with Chevron? What have we got going here? 331 days. That's another, I did another one of those 331 days ones. I don't like that. We're up $290 on it though. I would rather that's not 331 days. I'd rather that be like 120 days. And I'm feeling a little bit like I wish I would have not done that quite so far out. This one here received $78. So this is just all this is our long. So what's the delta on that one? The delta on the call that we put in there. That's a 331 days. 89. So that's good. We're making 89 cents for every dollar that the underlying stock market moves in our favor. And all we had to do is put up $4,300 instead of $15,000. Again, that's our leverage. The problem is that I sold that stupid thing for the same amount of time, 331 days, $4,700. It ended up being a credit. We paid $4,300 and received $4,700. We're up $290, which is why we're up $418. Plus, we're down 17 on the call because the market's starting to rally. But we're going to get a whopping $78 on that thing. And it looks like Chevron's getting ready to go. You know what I'd rather do? Well, we're going to just leave this one for now. That call's making that That put's making money. So let's leave it in there. We'll make some more money. Okay. DIA. Oh, that doesn't look good. Doesn't look bad, but doesn't look good. It didn't flush as hard as I thought it would. That's going into a little wedge pattern. Look at that. We expect it to come out the bottom, hit that red line, come up like this. You see how good land is at predicting market direction? And then probably do one of these, maybe a small one, and then go again. But if it doesn't, we got one log position here. We'll pick up some shares, 121 days. If that market wants to move and just go up, boom, break out the top of that as it breaks those blue lights. That's what it would be nicer to see. Nicer. You want to just see it do that, don't we? Yeah, we do. All right, Google. We already talked about Google. We already talked about Microsoft. We're making money on Microsoft. We're going to hang on. MSTR, we already talked about. PepsiCo. Woohoo! What is that? 121 days. There we go. Beautiful. Now, the problem here is that the stupid thing is only we come in here in 30 days and we put a call and we look to sell a covered call. The dumb thing's only worth, you sell a covered call, it's only $20. It's a why bother covered call. So that's why you don't have a yield max for Pepsi. There's no options money in it. What good is that? So we have a 120-day long call. That's all we have on Pepsi. It doesn't, yeah, I mean, you could put that in there, $89 over 30 days. But the problem is it caps that. If that thing goes up, anything above it, it doesn't make money anymore, stops making money. And I think there's a chance that PepsiCo could go. And the reason we thought that, right, was because Coca-Cola. KO. Look at Coca-Cola. And usually where Coca-Cola goes, Pepsi follows. Wow, look at Coca-Cola. That's just craziness. What's crazy is that Mr. Famous himself, Warren Buffett, took a bunch of money out of here. He took 50% out. Maybe that's what made it do this. We speculated before, right? Drive 1, drive 2, drive 3. That might have been him taking his money out. It went sideways and then he changed his mind. Maybe he's putting his money back in. And maybe that's what's causing Coca-Cola to rally. Might be Warren Buffett adding his money back into Coca-Cola. He likes Coca-Cola. This is what he used to do. I got this on my screen. See that? This is Coca-Cola alone for Warren Buffett. Per year, $776 million in dividends alone. That's $64,000 a month in dividends on Coca-Cola. That's pretty good money. Can't shake a stick of that. Better than a poke in the eye, but I think he took all his money out. Said he took all his money out. So if he took all his money out and the market went like that, he's a very sad boy. But if he's the one putting his money back in, he's a very happy boy. I don't know. But that's why we're looking at Pepsi, because we're looking at Pepsi to follow, right? We want to see Pepsi follow that baby up. Don't really want to put, and if it does something like that, we don't want to have our limits. We don't want to have a put on there or a call on there, sold call, limiting our upside potential. So that's why we're not going to do that. QQQ, trying to break a previous high. Look at that right now, right there today. Right there's our previous high, and that's where the market's sitting. So what do you think it's going to do? You think it's going to break through there and hold above it? We sold a put. We can get long call here. We should be up nicely on, oh, we're down. What did we, oh, we bought a put. Why in the heck did you buy? Oh, we thought the market was going to flush out. We thought it was going to flush out right here. And it didn't. Right on the day we bought it. Oh, you're really smart, Lion. Let's wait and see, because if this thing now could flush back down a little bit before it turns and goes back up. That would bring us back a little bit of money on this. This is just that was an insurance policy for something else, I'm sure. Can't remember what we did. Did we have notes on it? Lan, did you take notes? No. Why not? Because you're stupid. Take notes. Let's come in here. We don't have any money. That'd be $53,000 to buy one. You want to buy a call at the money? Probably not today. Let's see. Let's go in and see what it costs to buy a call option. How much we got? We got $8,000. Let's go in and buy a 30-day. Let's go buy an 121-day call. How much would that cost us? $2,600. We could do that. And that would cover our put right there. $2,800 is the theoretical value. Premium is $2,600. Getting it for a bargain. The reason you're getting it for a bargain is because we're bouncing off that previous resistance point and people think it's going to fall. You don't generally get you get 4 bars, 1, 2, 3, 4, and then you get a pullback for a couple of bars and then the rally. So we could actually hold on, wait, get that thing at a lower rate if we get 2 bars back, and then we'd be happier with it. But if we miss it, it could take off and just keep on going. We could miss it. Let's wait and see if we don't get a bounce off of that. We'll get a little, maybe a day or two pullback and then another rally, and we'll buy there. We got to keep an eye on it, though. Let's make a note. Make a note, Lan. What are you going to do? We have our put hedge from a previous position. We're now contemplating putting on a long call against our short put, against our long put, because we bought that put. But we're waiting until we see if we get a couple day bounce, pullback bounce off the previous high to then add in our long call. All right. SPY, same thing. We got that put option on there. What do you want to do with that, guys? I want to put a long call on that one too. But I want to see if it's not going to pull back first another couple of days, in a day or two. That's breaking that previous high right there, right now. See that high right there? See, and last time it broke that high. See that high right there? It came up, it hit it, and flushed. Oof. Now we're doing it again. We got another high right here. I just wonder if it's going to flush. Oof. If it does, that's where I'd much rather buy the long call. But because we got a put in here, anticipating or protecting the downside, we don't have anything to the upside. And we're long on the AT&T, and we're just going to bring our stop to break even on this one, because we're collecting. Oh, we should be able to collect some dividends on this one. Let's go take a look, because that's why we got into AT&T, right? To show us the dividends. So we come over here. Oh, that's the spreadsheet. AT&T has dividends, and the dividends paid out on AT&T come out, they're 27 cents a share, and they come out January 10th. That means, we got to go quarterly. Let's ask. We could figure it out, but it's easier to ask. When is the ex-dividend date for AT&T? AT&T's ex-dividend. The next ex-dividend date for AT&T is April 9th. This is the upcoming ex-dividend date for AT&T's quarterly dividend payment. Now, remember, they only pay quarterly. YieldMax pays monthly. YieldMax even has some that pays weekly, which is very cool. Dividend amount, 27 cents per share. How much did we get last time, did we say? Last time we got 27.8. This time they're doing 27.7. And they're way up there. Look, look, RSI is way up there. We're going to get a little pullback here because that's they're going into the dividends. That's what they're doing. That's a run up into dividends. Everybody wants the dividends. So you get a run up into dividends. And then here's the dividends. So you get a run up into the dividends. Dividends, run up to the dividends. Dividends, run up to the dividends. All right. So 27 cents per share. Let's say that we have, let's just do a nice round number. How much? Well, actually, we got a real position on, don't we? Let's go see how much we have. We have 100 shares. So how much do we have invested? Position. We have, well, 100 shares. Well, that's easy. If we have 100 shares, 100 shares, 100 times 0.278, 0.278. $27.80. Woohoo! And that's why if you're going to do regular, you got 100 shares of AT&T, which is $2,618, right? So you've invested 100 shares into AT&T. They're going to give you $27 in dividends on that money every 3 months. So what does that turn out to be? That turns out to be a dividend TTM of 4.23. Okay, see that? 4.23 right there. Trailing 12 months. That's the last 12 months. TTM stands for trailing 12 months. So the dividend estimate is 426%, 423. So when we're over here looking at the spreadsheet, right? Pull the spreadsheet back up. So we pull up our spreadsheet. Where's our spreadsheet? We pull our spreadsheet up, and you're looking at these dividend yields right in here. See these numbers? If we had AT&T listed in here, it would be listed at 4.23. 4.23. Now, if you can get 4.23% return annualized in a CD at Cache Valley Bank, why in the hell would you put it into AT&T? AT&T could go down. You could lose way more money than you're making on your dividend. I guess you could do that. I mean, that's the same with the rest of them here too. I mean, as far as that goes, Tesla could fall and you could lose way more money on your Tesla dividend than what you're making. That's true too. But at least it's 99% instead of 4%. But AT&T goes up in value. So you got your NAV growth because they're actually not using options to do this, right? So you buy AT&T and it goes from $22 to $26 and you have 100 shares. Well, you just made $4. 4 times, you made another $40. So you made $40 there and you made another, why bother on your, you made another $27 on your dividend quarterly. So, hey, it's all there. It's all money. And it's good that AT&T is considered to be one of the very best. In fact, if you go get Pitt News Magazine and you come over here to your traditional calculator, you can see it's number 2 on our list. AT&T 4.24. The only one that's above it is Verizon at 6.5. Oh, wait, these are now out of order. I got a 6.6 here. How come that? Oh, that's Pfizer. It went up. It used to be down. Let's go. So I got to reorder these. It's higher than, so Pfizer raised their dividends, probably because their shares fell. So now Pfizer is on top. Pfizer, Verizon, AT&T. So let's go look at Pfizer. Well, it's PFI. What's their symbol? PFE. Let's just go put PFE in there. Yeah, they're tumbling, tumbling down. That's why their dividend went up. Because when the share price goes down, they raise the dividend to try and entice you to stay in the stock. They don't want you to sell your stock so you can get their dividend. So they raise the dividend to get you to stay in. You'll notice on the yield max funds, when the market goes down, the dividends go down. That's because they didn't make any money, right? They're not making as much money. They make money when the market goes up. Their strategy is a long position. Now, they do have short position funds. We just don't trade any of them. We could go look at them, but we're kind of running out, kind of getting long in the tooth in this class. We've kind of been here a long time, but we got too much to look at. Okay, here's QQQ. SPY, we already did those. AT&T, Tesla, we did that one. Texas Instruments. Wow. And we bought a put on that one too. That must be another one that we had a what in the heck? How come we have all these put options? We must have been. Well, that sucks. Did we sell this or buy it? We bought a put. Why did we buy a put right there? We thought the market was going to come down further. No, land. You dummy. Let's liquidate that. I don't know why I'm buying all these put options. It had to have been hedging a long position that got paid off. That's the only thing I can imagine why I was buying all those put options. I didn't write it down. Because look, I did it on every single one of them. What were we hedging? What were we hedging? I don't know. Texas Instruments. We should have been buying long. We should have been selling puts down here. Why was I buying puts? ExxonMobil. There, we bought a put. Oh, we sold a put. Okay. Wow. Finally, Lan, you did something right. What the heck was I doing? I had to have been hedging something. I wouldn't just buy puts right there. That doesn't make sense. MSFT. Google. Oh, we're okay with Google. I'm not sweating that one. That's our big nasty. Put. Buy a put. Yeah, we bought a put here too. What's the delta on that? What is that? It's a 121-day put option. It's right at the money. The delta is a 0.4. What would it cost us to put 40 of those on? 40. 17,000. We've only got 8. Let's go down to 8. That would be 40 if we do a delta 20. We'd have 50, 40, 20, 18, 19, 20. You're not going to let me do it? 8,008. Oh, 8,600. Okay. We're just going to hedge that. I don't know. That's a little frustrating. All right, there's where we sit. Tesla's our big money maker right now. It's a big money maker over in yield max funds too. But you can see over here, just in the traditional way of doing things, these are the returns you're getting on your dividends. And this table's in here for you. It's in here. This is in their spreadsheet. This is the yield max ones you can see right here. Much higher. I had those sorted, but they keep changing. There's, it looks like our highest one right there is Tesla. Tesla's back on top. Of course, we got to go change our dividends because they're not right. Got to update the tables. because Google doesn't, or Google, Amazon, or Microsoft doesn't give us. You guys, are you familiar with Google Sheets? I wonder if they give us that. I'm going to go do a little research now that we're done with our class here. And I do have a Sunday school lesson for you. And I will tell you the software that we're using here is Track and Trade. So for those of you who want to use Track and Trade along with me, go get it over at trackandtrade.com. We're using the stocks version to do all these options. And 6 times Stocks and Commodities Annual Reader's Choice Award, actually 7 times. But that's the software we're using here. That's this software. So if you want to join me, go get the software and you can do what I'm doing here with options. And hopefully you'll be a little smarter than I am. Bruce says he just had a good payout, big, nice dividend. That's nice to hear, Bruce. Bruce says he worked at Enco before it was Exxon. Is that right? I didn't know it used to be Enco. Enco. All right, let's see. So let's come in and do our Sunday school lesson. Let's put me down here. We'll go here. All right, plan your trade and trade your plan. Don't be a jack of all trades and a master of none. Specialize in one or possibly two types of trading strategies. Consider some short-term day trades and maybe some long-term options. Cover both your bases. Do what works for you. Maybe just have your dividend account and you're doing a few options over here in the stock market, trading a little bit, buying a few shares. Just kind of trade a little bit over in the stock market to make some money, and then have your dividend strategy over there on your spreadsheet. Maybe that's all you have to do. That's pretty much what we've kind of resigned to be doing over here, right? Actually, what did we close out today? Did we close all positions? What did we close? $34. $34. All right. Well, we get to come over here. February options on stocks. What's today's date? Today's Wednesday. Wait a second. Today's the 19th. I said yesterday well, we'll just leave that green. This was our day trading. I put that on the wrong date. Some of you guys probably recognize that and were laughing at me. But so today we got green anyway. How much did we say? $35? $34. $34 stock options on Wednesday the 19th. Right here. 34 whopping big dollars. Wow, we're not doing a whole lot of trading, are we? We're just living off our dividends. We're just living off our dividends. All right. So, and I need to go back over here so you can see that I put that onto the spreadsheet. You guys couldn't see that. I was still looking at the Sunday school lesson. All right, so I put that $34 in there for us right there. And I made that day a green day, a little tiny green day, small winter day, better than nothing. Cleaned out a few options. That's all we really got done today. Not really having a good month in February. We're paying more attention to our dividends. We should put our dividends in here too, huh? We should put our dividend column in here. I mean, that's only fair. We're trading. We're got our dividend column, but our dividend column over here is $12,000 for the month. Or no, that's not for the month. That's total. Here's our month. So we're up $4,500 on our dividend trading. We can't complain about that. 4,500, and our spreadsheet over here says that we're down 3,400. So in reality, we're up $1,000, right? I should put our dividend column over here. This would be a nice way to track that, because I'm always, I'm over here saying, hey, we need to make notes. Where do we put our money? Oh, we got to make notes. But if we have 4,000, we made $7,000 last month, 7,722. We come into January, we add 7,000 to our 3,000. That's 7, 8, 9, 9,800. We need to do that. We need to put our dividend columns in here, because we got it set on a separate one, and it's not. Yeah, that would only be fair, because we're making a lot of money over here. We're doing pretty good on our portfolio, on our dividend portfolio. All right, that's it, I guess. If you guys had fun today, like, share, and subscribe. Do all that YouTube stuff. It always helps. Lets me know that you guys like what we're doing here. It's been a long class, and but we learned a lot today, I think. Okay, that's it. We'll let you go. We'll see you guys tomorrow. Tomorrow is Thursday, so power hour. Do a little day trading in the afternoon. See if we can't collect a few more shekels. See you then.